Wealthsimple and X have launched or signed a partnership that will allow Canadian users to click a ticker symbol. It shows real-time pricing data, etc., and a trade button. So effectively what I took from it is you can just buy stocks without ever leaving the X platform. Now, I'm fairly certain, like, I don't think when you click that trade button, it's going to route you to your Wealthsimple brokerage. I think you can actually buy the stock on X. That's kind of the gist I took from it. And I think overall, this is kind of a deal for Wealthsimple that's no doubt bullish for Wealthsimple, but not so bullish for retail investors. X does have a ton of users and a massive finance community. There's no doubt that it makes Wealthsimple's reach wider. I'm kind of curious to see if this would work for non-Wealthsimple clients or if you have to have an account. So if it still appears for non-Wealthsimple clients, like let's just say me, I'm with Questrade. If I click that button, do I get something that says, buy this instantly if you're with Wealthsimple or something? Like that's a massive advantage for Wealthsimple if that's the case. But it's impulse trading, I guess, would be the first thing that comes to mind for this. There used to be a bit of friction between hearing about a hot stock and actually making a purchase. And I know the friction is still very small, but the friction still exists. Now, I mean, the friction, at least for Wealthsimple clients using X, will be effectively zero. The one thing is I can't see any regular investor using this whatsoever. Like, I can't see a situation where I would be on X and be like, oh, I need to buy more Royal Bank stock today. I'll just click the ticker and do it. Like, I just don't really see an edge for that. But if I'm looking to speculate, gamble a bit, maybe I look to some stock on the venture or CSE that an influencer with, a large following is promoting and say, hey, maybe this will work out. It's a one button click now to get exposure to that. So I think that's kind of an added element there.
Are you saying it's making pump and dumps even easier?
Yes. That is like, and I don't think anybody could deny that it will do that. And I'm going to go over that in a bit, but there has been a lot of chatter on influencer regulations on social media. We've seen that report at the start of the year where I don't want to say they redid regulations, but they kind of like came out with them and said, like, this is what you need to follow if you are a financial influencer. Like,
yeah, I think it was like guidance or something like that. Yeah.
So disclaimers, all that type of stuff. Like this would occur for YouTube, X, Facebook, whatever it may be. And I'm kind of curious as to how regulators will look at this one. Like, obviously they have a lot of stuff to deal with, but I mean, now, and maybe I'm being like over the top or paranoid about this, but I really don't think I am. I mean, if you look at large following accounts, they've pretty much now separated the barrier to front running stocks to pretty much zero. Like if you, like obviously somebody posting about Royal Bank, you're never going to move it. But I mean, there's plenty of low volume venture stocks or something that somebody could easily buy. They have, let's say, 100,000 followers on Twitter. They make a post on it and it's a one-click option to buy that stock. It does add an element in that regard. And I mean, sure, again, some people could have they see the tweet, they grab their phone, open up the app and buy it anyway. But you're talking 35 to 40 seconds there it takes to do it. So it does create some sort of friction. Here, you'd be shocked at the actions people take on something that takes 2 seconds to do versus 45. Like there is a big difference. They've done studies here that kind of prove there is a big difference. So the other interesting element here for Wealthsimple is just kind of the continued advantages versus the big banks. So I don't know how this will gain them clients on a meaningful scale. Again, if you're pitching to non-clients when they click this button, I don't really see that as a tipping point for somebody like going to Wealthsimple versus let's say choosing a Questrade. But I mean, from a brand element, like it does get you many more eyes on the brokerage. I mean, if you don't have an account and you click that button, you're going to see the brand, you're going to see the name.
Yeah.
Eventually down the line, if you're thinking about moving brokerages, if you've had that ingrained in your mind for a long time, you might think of Wealthsimple. And I don't really know what
apparently if you click on the ticker and you're not with Wealthsimple, it'll bring you to a sign up page.
Yeah. So I mean, this is kind of where I don't know what the structure of the deal is. Like, I don't know if Wealthsimple has to pay X to do this, or if this is something that X is just providing them because it obviously adds an element to the platform. But I mean, that would like exponentially lower Wealthsimple's client acquisition costs. Like, X has a lot of users, so
Yeah.
it's kind of an interesting concept. Great move for Wealthsimple, in my opinion. I think not necessarily bad for investors who are truly long-term investors doing all that type of stuff. For people who maybe have a little bit of an impulse, or you know, to trade hot stocks, maybe probably a bit of an issue. But I'm kind of curious as to who their US partner will be. I don't think they have a US partner yet. I would imagine it would be Robinhood. That seems like kind of a no-brainer in that regard. But right now, as far as I know, unless something has came out recently, it is only Canadian stocks, and it's Wealthsimple.
Yeah, I mean, I think it's probably like not Trump, but Elon Musk has always said he wants X to be the everything app, right? So
Yeah.
it could be their foray into that, to making even like trading available on X with some third party application or third party partner like a Wealthsimple. So I could see that happening. As you were talking, I was just kind of researching. There seems to be mixed reaction on like Reddit. Some people say it's going to be a good thing. Some people expressing concerns about privacy, or even the fact that it's with Elon Musk. And Elon Musk, a very divisive figure. And I saw a couple of posts. It was like one guy said he was going to transfer his money out of Wealthsimple because he didn't want to have anything to do with them after they partnered up with X because of Elon Musk. So it is a risk, but at the same time, I think probably the benefits from it and getting more signups definitely outweigh the risk of getting some people pissed off and closing their accounts.
Oh, it's a huge positive for Wealthsimple. I can't imagine how this doesn't help them over the long run. I would never move accounts just because of a partnership with it, but that's other people's choices. But kind of leads me into the main topic, the gamification of investing, I guess, like overall, and how unhealthy it is for retail investors in general. I mean, for those who don't know what gamification is, it's game-like elements integrated into brokerage platforms, not necessarily just brokerage platforms, everything. And I mean, a lot of the psychology of it comes from things like casinos and social media. I mean, they're designed to keep you on the platform, or in the case of a casino, spending more money. So I'm pretty sure this is Robinhood that does this, but whenever you buy a stock, it like blows confetti off on
Yeah.
the screen.
Yeah,
Like,
I
it's
think it does. Yeah.
yeah.
Mhm.
So you buy the stock, it confetti explodes, just like when you hit something on a slot machine, it blows up and says you have. It's a dopamine hit for sure. And they also have scratch off tickets. I mean, digital scratch off tickets where you kind of open them up and you scratch it, and it could be nothing. It could be a free stock. I mean, you're looking at points, badges, login streaks. There was one study that actually found that even a point system on a platform like this with absolutely no economic value, like the points you gathered did nothing for you, encouraged more trading. Top stock leaderboards, stuff like that, trading competitions. So this aspect isn't necessarily gamification, but it is to a certain extent. I mean, I'd call this like social embedding. You know, a lot of people are on social networks these days, and I mean, the landscape has evolved substantially over the last 5 or 6 years. I mean, Robinhood was at the forefront of this even before then, like even probably 5 years before then. But I mean, the initial aspect of these brokerages was to make investing more accessible to those who didn't have a lot of money. Obviously, Wealthsimple's, like I had mentioned on the last episode, like their motto used to be get rich slowly. And I mean, at the start, it certainly worked. I mean, you have commission-free brokerages. They removed a ton of barrier to entry. I remember when I first started, that would have been 2009 with RBC Direct Investing. Like, I didn't have a lot of money back then. I was making probably $18 an hour, I want to say. So the 10% commission really deterred me from buying, because obviously I didn't have a ton of money. And if I wanted to buy a share of Royal Bank, I don't even know what it traded at back then, but the commission cost would have ate into a ton of it. That's eventually I moved from there to Questrade because the commissions were cheaper, and now obviously they're free. But yeah, now we had commission free trades, then we had fractional shares. Now we have all these type of, activities, the leaderboards, the confetti, all that type of stuff. We have prediction markets. Now you have the ability to bet on company deliverables. You have trading leaderboards, rewards programs, brokerage, social networks. I think Robinhood's getting into this. And I mean, the marketing around a lot of these functionalities and added features are to make investors' lives easier. And for some of them, I do agree, like commission-free trading, no brainer. Fractional shares, no brainer. If I could have bought fractional shares back in the day, it would have been a big difference with a smaller amount of money. But I do think the other aspects that are kind of being brought to the market, including like the prediction markets, I'm not a fan of those on a brokerage platform. Like I have no issue with them whatsoever outside of a brokerage platform. But the they're poor for retail investors. The Ontario Securities Commission did a study. They did one in 2022, and then they touched base on it in 2024. And they said that systems like this increase trading frequency by upwards of 40%. So I think what they ended up doing was they created a simulated environment. They split two groups of investors apart, and they put some users on apps with heavy gamification and others just on normal platforms. And the ones who were on the gamification apps traded 40% more than the ones who just had that bare bones brokerage. So regulatory body in Europe did a study on the gamification brokerages as well. And they found that engagement on the platforms absolutely launched, but returns were significantly worse for the investors on these apps than they were for investors who were just on normal brokerages. So good for the brokerage, bad for the investor, I guess you could say. And I mean, some researchers have kind of mentioned that these apps are kind of now being designed to just create consistent like dopamine hits. Because obviously sensation seeking, risk taking, impulse buys, all that type of stuff. And another element I think is FOMO, like fear of missing out. And obviously, fear of loss, we feel that much worse than gains. So
well, I would add into like instant gratification. I think we're a society that's like that. And I know sometimes and we were talking about poker and some parallels, and I can take pretty much anyone, give them some basics, and then give them a really basic strategy that will win them money. But the problem is people are not patient enough to follow that strategy. And a lot of people would understand the value of it, would understand how to do it, but then they get into real time and they're like 2 hours at the table and they haven't seen an end and they get bored and then they just deviate from the strategy. And it could just be, I think investing is very similar to that, right? Someone will buy a stock and they're like, okay, I'm owning this long term, but then the stock's not doing anything for a few weeks and then they just give up on it and then move on. And whether it's the right move or not, who knows? But just the fact that they want their thesis to play out in a week or two when it might be the right thesis, but it'll actually take 2 to 3 years to play out. And it's just not a sexy thing for, unfortunately, the generation we're in, and the younger generation is just about, getting things quickly.
Yeah. I mean, that's that element of dopamine. I mean, if you buy a stock and it goes up in 2 weeks, and a lot of it has to do with, I mean, I guess you could look to the leaderboards, for example, like the top bought stocks, sold stocks, how much they've done. What kind of makes like boring investing, the type of investing that has worked for pretty much the entirety of its existence, kind of boring, obviously. And we're kind of always chasing that hit, I guess you could say. And I mean, on the FOMO side of things, like, how do you take advantage of investors fearing like they're missing out from a broker's perspective in regards to making them trade more? You pretty much reduce the friction it needs to take action.